Hey everyone, David Shahade here, Real Estate Investment Finance. Today we're discussing the 5 reasons over why investors would buy new property over established property. Our team have been receiving quite a number of inquiries lately as to what the benefits are. Our number one benefit over buying new over an established property is the tax depreciation benefits that you do get when you do buy brand new. The government allow us to write off what we call depreciation, and that's chattels and fittings and the building going down in value. It's something that's not a cash expense, but it's something we can claim as a tax deduction. As a property investor, being able to have this added tax deduction when you are doing your tax return can equate to tens of thousands of dollars of tax savings and additional cash flow to your property than if you didn't have that. Our reason number 2 is the significant stamp duty savings. Guys, when you're looking at buying land and building, the government just charges you stamp duty on the land portion as opposed to the total finished product. So guys, let's use an example that you were purchasing land and building for $600,000. Now, if you were to buy a $600,000 property and pay a full stamp duty surcharge on that, you'd be paying approximately $10,000 to $15,000, depending on the state that you purchase, more than if you bought land and just paid the stamp duty on the land, as opposed to doing that. Reason number 3 is a brand new property appeals to a better tenant than an older property would. Guys, as a property investor, your tenant is really your client. They're paying you for your property. It's super important we get a great tenant so we can set and forget and know our rent's getting paid and our investments being looked after. Guys, having a brand new property will appeal to a better class of person that's going to ensure that they can pay you month in, month out and look after your property so your property can do what it needs to do in the background to build you wealth long term. Reason number 4 is repairs and maintenance is significantly lower on a brand new property than it is on an old property. Guys, as a property investor, the last thing you want is to buy an investment property and get a phone call every second week from a tenant that something's broken and needs repairs. Your property is meant to be able to provide cash flow, not take out of your cash flow, but however, create passive income stream for you. A brand new property supports and allows you to be able to set and forget about your property without having to have those big out-of-pocket unexpected costs come up on a regular basis that an older property might give you. Reason number 5 is, as an investor, you can get a premium rent by buying a new property over an older property. A tenant is willing to pay that little bit more to know they're getting a brand new property. Guys, as an investor, being able to maximize your rental returns and yield is extremely important to ensure you got the cash flow coming in to be able to fund your property portfolio. Thanks guys, and we'll see everyone soon. Cheers.